Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing another transparency update with a portfolio, just doing a quick breakdown of every single stock that I own, along with the losses for today. Unfortunately, no gains for today. We didn't even get any gains for VOO, which basically mirrors the general stock market trend in my opinion. This is pretty representative of what the overall stock market is looking like. And then we also have NASDAQ as well. This is like one of those more tech-focused index style stocks. So NASDAQ and VOO were both negative for today. No gains whatsoever, just losses. And even if we look at our watch list for today, there's just a few stocks that are in the green. One of them is CCL, one of them is MFA, one is Shopify. Really the only tech stock that I see here, or not even really tech stock, but just kind of in that tech sector with e-commerce and stuff like that, that is positive for today on my watch list is Shopify. Everything else is like financial stuff, and then you have cruise lines as well. I'm assuming maybe some sort of news came out on CCL today, and then we also have Lockheed Martin, Bank of America, JP Morgan and Reserve. So, you know, the bank stocks are some of the very few ones that are doing well for today, at least JP Morgan and Bank of America. And as always, before I forget, if you all do enjoy these transparency videos, then make sure to smash that like button, drop a like on the video. It really does help me out, and it also helps with the YouTube algorithm. Plus, I greatly appreciate it. But just beginning off today, at 9 a.m. in the pre-market, we started off the portfolio at minus 1.08%, or minus $1,177.15. And then pretty much from 9 a.m. until this point at 9:45 a.m., we transitioned from, of course, the normal pre-market hours until 9:30 when the normal market hours started. We are at minus 1.26%, and then we hit this peak at minus 1.11%, or minus $1,206. Then we dropped down to a super low point from this transition of 9:45 a.m. to 9:55 a.m. So just 10 minutes later, we dropped all the way down to minus 2.33% for the portfolio, which is minus $2,533.27. Then we jumped back up from this point. We had a huge rebound back up to the 10:30 a.m. time period, in which the portfolio was only down about 0.81%. or minus $880 about it. And then from that point on, we had a huge amount of volatility, just total ups and downs, just constantly, it seemed like, up until 11 a.m. It dropped back down, and then we had a big rebound upwards all the way up from 11:10 a.m. until 11:40 a.m. And at 11:40 a.m., I thought, okay, you know what? Maybe this is going to be one of those days where we start out low and then end it high with a surprise. But unfortunately, that just was not the case. From 11:40 a.m. all the way until 12:20 p.m., we had a huge drop. It bounced back up once again, a little bit of volatility here and there, dropped back down at 1:20 p.m. to minus 0.92%, bounced back up with much more volatility once again. Like I said, the volatility was pretty much consistent throughout the whole day. And from this point onwards, it just kept on with the volatility going down, 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 and down until we hit the aftermarket hours for today. So at 3:55 p.m., 5 minutes before we entered the aftermarket hours, we were at minus 2.34%, or minus $2,545.70. And then in the after hours, we've had a 0.13% rebound, or plus $136.89. And then, as I mentioned earlier, just for the normal market hours for today, we are at minus 2.65%, or minus $2,884.86. So overall, like a $2,700 loss, I'd say, if we just combine after hours and normal market hours. So definitely not the greatest day out here. To be honest, I am getting a little bit tired of this just constant volatility. I would rather just see the market go in either or direction. I'd rather just see them, you know, if it's going to spike down, let it happen. Just forget all this volatility and just let it happen. And if it's going to surge up, let that happen too. It's just kind of boring to have these days like this. And I know it's consistent with the stock market. This is just something that happens with the stock market, and you can't do anything about it. It's not anything new, but I still do think when we have a market like this, it can be really boring because it's just constantly, you know, for the first few times, whether it goes up or down, we're either getting really excited because it's surging, or we are getting pretty disappointed and worried for the future if it drops significantly. But it seems like after this happens, 5 or 6 times, just day after day of it going up and then correcting itself back to where it was at the beginning, it has pretty much done that so far. If we look at the past month, I mean, it's just up and down back to where it was, up and down once again, back on this baseline. It goes down, then back up, and then once again, we're still on this baseline that we've been at since like July 7th. So almost like a full month of just total nothingness. We've had a lot of things happen, but when it comes to what the general outcome is afterwards, we're just still at this baseline that we were at even on like July 7th through today, which is July 28th. So unfortunately at this point, it's just another one of those boring stock market days where nothing significant happens. Yes, this would be considered a significant drop day for a lot of people's portfolios, but I'm just simply used to days like this, especially considering that I own Tesla. Tesla is always going to be a big mover in either direction, in my opinion. It's one of the most shorted stocks in the stock market, and you can really just expect volatility out of Tesla. It's nothing new. So we did have a little over a 4% drop today for Tesla after a great day from yesterday, which was like 8 or 9% in gains. So this stock price is once again under $1,500, and I think as people see this, they may start to buy in the future and see this as, maybe a little bit of a discount. And yes, I do think Tesla is at a premium. I've always said this. I think it always will be, in my opinion. It's kind of like Apple stock, in my opinion. Very rarely do you see the stock actually meeting the analyst fair value. So as I've said earlier, nothing too special going on currently. Yes, we do have the news of an upcoming stimulus check, another one for $1,200 coming out soon. I've seen news articles talking about us maybe getting a stimulus check in early August. So if they were able to get this out to most people by early August, then I definitely think that could stimulate the stock market once again and also stimulate the economy, therefore just helping everyone in the US. Yes, some people will use it towards non-financial things like, there's going to obviously be people that won't use that money to invest, because if you need the money, then you're going to be using it towards what you need it for. But a lot of us that don't need that extra $1,200 will likely be putting it into stocks. That's most likely what I will be doing as well, unless some crazy payment comes up that I have to pay. But I personally wouldn't be opposed to another stimulus check. I mean, I'm just one of these people that'll be fine with it, regardless of whether it happens or not. If it doesn't happen, then I guess it's just meant to be. And if it does happen, then that's an extra $1,200 in my pocket. But we're eventually going to have to pay for that somehow, I think. And future generations and people younger than us, and even us likely will be having to pay for that in some sense, in my opinion. So it's not just a free ticket with no consequences. We will be having to pay that somehow. But like I said earlier, I do think it could stimulate the economy much more, just like unemployment did and just like the stimulus check did earlier this year. So if that does get passed and announced that there will be another stimulus check for sure and that people will be getting paid soon, then I think we could see another big increase, at least within the stock market. Might not even be that huge, but it could be just a gradual increase thanks to a little bit of that stimulation. But if I were to give you all an honest opinion of what I think the likelihood is for a crash in this upcoming next few like 5 or 6 months or so, I would probably say there's like a 60 to 70% chance of a crash coming up within these next few months, at least by the end of the year. By the end of 2020, I believe there's at least a 60 to 70% chance of a crash. And keep in mind, this doesn't mean that we could not have a crash. I'm just saying what I think the likelihood is in terms of just the chance ratio. But I think this is kind of just really similar to what happened back in 2008. Bad economic situation overall, and then of course in an election year as well. So I feel like this is once again the perfect storm. Hopefully I'm wrong about this. I would love to just see my stock skyrocket even more in the future, but that is a little bit of my concern that I have when I'm thinking about whether I should buy Tesla sometime soon, and then of course other ones like Microsoft and maybe even Apple. Microsoft is definitely a good dividend one, but I think it is likely that we could see a crash in the future, especially within the next few months or so, but I also wouldn't be surprised if there's not one either. This is why they say try not to time the market, because we honestly have no idea, and the best thing we can do is guess, and that's just the honest truth. There's no finance guru out there that is going to be able to tell us with 100% accuracy and proof that there will or will not be a crash in the future. That's just the thing. It's at this point, it's all just about opinions and predictions. So I would personally say that I think there is like a 60% chance or maybe even a 70% chance of a crash coming within this year still. And if there's not a crash within 2020, then I think from then on on, there should be a lot of confidence for the future, because I think really this is going to be your toughest year economically for a long time, especially just given everything that is going on. Once we just get into the clear and get out of 2020, I think, it's a bright future ahead, especially for the economy as well, as long as there's not a crash in 2020. So if we can escape this potential of a crash in 2020, then I think we could be okay in the future, at least for a while, until the next correction. But anyways, let's go ahead and run through the numbers for today. As I mentioned earlier, Tesla is the biggest dropper for today at minus 4.40%, and that is a loss of $2,332.96. Then the total return is plus 73.67%, or plus $21,482.57. And my average cost is $847.48 per share, and it takes up about 47.87% of my portfolio. So not a great day for Tesla, but overall, even looking at the past 3 months, a huge surge of growth just over this past 3 months. So even though we've lost a little bit in the past week, we have still gained a lot in the past 3 months, and that's what matters. Then next up, we have Microsoft stock. This is another one of those stocks that is surprisingly suffering a little bit more than I expected lately. We could see a flat period for a while, like we saw from like July 30th to like October 18th of 2019. I feel like it is likely that we may see another period like that for Microsoft, just to give it some time, to take a rest, because this stock has already been skyrocketing for the past year. So I wouldn't be too surprised to see another, time frame like this where we just have a flat period. And then for today's return, we are at minus 0.79%, or minus $313.95. And then for the total return, we are currently at plus 18%, or plus $6,016.08. And it takes up 37.29% of my portfolio, and that includes 195 shares at an average cost of $171.39 per share. Then finally, we have Apple stock, a minus 1.40% loss for today, which is minus $222.60. And then for the total return, we are at plus 30.77%, or plus $3,695.40. This takes up 14.85% of my portfolio currently, with a holding of 42 shares at an average cost of $285.95. And the really crazy thing about this one right here is that with me buying at this average cost, a lot of people called me crazy back then for buying at this cost, and it seemed expensive for the time being at that point in time. But now that we look at this right now, I'm pretty sure there are tons of people that wish they would have bought at this average cost price. So I'm really satisfied with Apple so far. Definitely a big grower for me aside from Tesla. But as usual, I'm still very satisfied with the stocks that I own. And I do see a little bit of an opportunity with Microsoft right now, where it seems like this could be a good time to buy in, where we're getting like a little bit of a plateau. If you look at the past month, the stock is only up 3.66%. So if I do come across some money sometime soon, I wouldn't be opposed to buying a little bit of Microsoft. For one thing, I'd love to top it off at 200 shares, maybe get another 5 shares or so. And it would also just add in more shares for my dividend yield. So I'd love to get more dividend payments in the future. That definitely helps out with passive income. So I'm definitely not opposed to maybe purchasing some Microsoft shares in addition to some Tesla in the future when I do get some money to deposit. Anyways, I hope y'all enjoyed this video. If you did, please make sure to smash that like button. And also feel free to sign up to Robinhood and Webull in the description below using my referral link. If you use my link, then you'll get some free stocks, and especially with Webull, you can get up to 60 free stocks right now, depending on how much money you deposit into your account. And keep in mind, you can deposit this money and get the free stocks and just take the money right back out. So there's really no risk whatsoever. You just have to deposit your money temporarily, and it's nice passive income. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.